April 11th, 2024. Bar 43 broke out of the top of this range. You can see the range essentially from here to here. It was a bull channel, right? And so when you get a bull channel and then you get a big surprise breakout 43 above the bull channel, you have to be thinking you might end up getting a measured move up of the channel. You can see it's pretty much exactly where we went to today at this high, and that's where we started to pull back. Additionally, we got an II after a sell climax. You can see bar 6 through 10 was a sell climax, a breakout attempt of yesterday's low, failed breakout of yesterday's low, and then an inside pattern. And if you have Al's encyclopedia, you can go look up the IIs after sell climaxes, and there's like a ton of examples of things like this happening. And usually it'll drift sideways top for the rest of the day and it won't go too far above the day's high. But this wasn't a giant sell climax, and it got there rather quickly, so we ended up getting a surprise breakout. But an II after a sell climax, what I think a lot of times it's going to go more sideways to up rather than up, and it's going to do stuff like this, and maybe even go a little more sideways than that. What I would do, I would buy, just buy above 12, put a stop below 12, watch. I don't like to actually go to Al calls them Walmart trades. I don't like to actually go to Walmart because if I get stopped out and I'm actually away from the screen, I feel a little dumb. But I usually, if I do something like that, I'll just put a TV show on over my screen, and I won't look at the stock market for 45 minutes or an hour. And then if I hear a ding and I got stopped out, then I'll go, start reassessing the market. But usually I'll just let the trade run and have, try to exit basically at the high of the day. So II after sell climax, pretty reliable pattern. I don't have too many examples of it, but if you have Al's encyclopedia, definitely go look at that because he has a ton of examples. Bar 1, big tail on the bottom. Not really that great for either side. You can see we're pretty much at the top of this trading range, so we're in the middle of this, or we're probably going to get into the middle of this big trading range yesterday. Bar 2, big follow through for the bears, so probably always in short after bar 2, but not really all that clear. I think that you're heading into the middle of the trading range, so it's hard to be short or long here. Bad follow through on 3. It is always a short though, so if you're going to be short anything, you should be short. Bad follow through on 3, big tail on the top, tail on the bottom, and you're right on a flat moving average, so hard to want to do anything. Inside bar 4, probably buyers below, probably sellers above, and you can see we did end up finding sellers above during 5. Bar 6 reached a 50% pullback of the spike down from 1 to 3. So a lot of bears, they don't want to sell all the way down here. They'd rather sell a pullback of the spike, and you can see we got a 50% pullback of the spike, and then traders took it. That's a pretty common pattern on the open when you get any sort of spike. There was one earlier this week, like I said yesterday, 50% pullback-ish, traders bought. And traders take a lot of trades around the 50% pullbacks, especially on the open. So I thought pretty relevant that bar 6 went to the 50% pullback and sold off. Bar 7, a big bear bar closing kind of near its low, but it's around yesterday's close, and there's a tail on the bottom. It's a big enough bar that it was probably enough for a second leg, and it is probably always in short, but not really the best sell to close bar. Follow through for the bears on bar 8, but a big tail on the bottom, and more follow through for the bears on bar 9, but again, a big tail on the bottom. So difficult, much bigger tail on the bottom, so difficult to be short here. And 10 is a really climactic bar. I think it was technically sell to close 6 or 7 and 8. I probably would not sell to close at 10. It's a breakout attempt of yesterday's low and a relatively oversold. We're not going to trade down, in this steep of a fashion all day. So I think at this point, traders are using 10 to take profits, and they're waiting for the market to pull back before doing anything. 11, an inside bull bar. I'd rather wait to buy above 11. I'd rather wait and see what happens, see if we get essentially some sort of pullback and then a buy. 12 is an inside bar, a bear bar. Essentially try to test a 10 close, and the traders who sold the close at 10 obviously disappointed in 11, and they're getting out during 12. 13, a big bull bar closing, or sorry, not a big bull bar. It was a big bull bar closing near the high, but it sold off. It's an entry bar for the bulls who bought the II. I think definitely okay to be long, definitely okay to just hold. Again, I think this is a swing trade, and it's one of those ones, this is a prime example of when you enter a swing trade, you have to be thinking about what is this trade probably going to do. So when you see 6 through 10, and then you want to buy above the II, are you buying above the II thinking we're going to rally straight up and it's going to look like 43 through 47 did? No, that's just really unlikely to happen. It's probably going to have to go more sideways because the sell-off from 6 to 10 was relatively strong. So when you get a relatively strong sell-off like that, you have to be expecting the market to trade a bit more sideways first before it goes up. So you should always be thinking about that with your trading is when you enter a trade, do I need this trade to go right now, or is this a trade where we're probably actually going to go a bit more sideways before we go up? And that'll help you sit through pullbacks. And one of the ways you can determine that, I think, is just looking at risk reward. if you're long and we start to go sideways down here, well, what do you knew we were probably going to go sideways from this, but what do you still stand to gain? Well, if we do go your direction, you still have a ton of money you can make versus, if you're long on the close of bar 30, how much money do you really stand to make at this point? The market's already gone a long way, and we're probably going to find sellers somewhere up here. So your risk reward isn't all that great. So if you're long up here, you need this to go to your profit target now. You don't really want to sit through a pullback. But you're probably going to have to buy in the close of 30. So 30 is more of a sell the close bar. But regardless, just using risk reward to figure out is another way to help figure out if you should let a trade go sideways rather than just go straight up if you're buying. I hope that made sense. Let me know if it didn't. Maybe I'll make a video on explaining that a little deeper. 14, a bull bar, but a tail on the top and kind of bad follow through on 15 and 16. Big tails, doji bars at the moving average. We're probably around the 50% pullback. I don't know, of some kind. Yeah. In that general ballpark, you can see we oscillated around it. But I think that probably buyers below any of these bull bars. 18, a bear bar closing kind of near its low, but not a good sell. We've had 5 straight bull closes, so I'd rather wait. 19, a bull bar, but a tail on the top. Okay to be long, always in long, but probably still going to go a little more sideways before we rally. At this point, I do think we're probably going to test at least the 3 low because bulls bought below 3, the breakout below 3, and they scaled in, and this is probably a trading range day, and we're going to test magnets on trading range days. We might even test the high of bar 7 since it's a magnet. Bar 20, a bear bar, but a tail on the bottom, and it's failed breakout. Sorry, not a failed breakout. I'm a little tired. We are in the middle of a tight trading range, 18, 19, 20. So I don't want to sell. I think we're still on the buy above 12. 21, big tail on the top. You can see any trade we bought the close of 19, disappointed 20, using 21 probably to get out. 22, 23, big tails on the top. So possible wedge, on a smaller time frame, up, down 21, up, down 22, up, down 23. So a possible wedge, but 3 straight bull closes, better not to sell. You can see we triggered the sell below 23. It's not a good sell, but it's a theoretical sell. Maybe you could argue it's a wedge 16, 19, 23. But again, better to just wait and be long or flat. 24, bear bar closing near its low. I don't think bulls have to exit. We're in a upward sloping trading range, and we just had 3 straight bull closes. So I don't think bulls have to exit. Outside up 25, big tail on the top, and follow through 26. 27 is a wedge, 16, 23, and 27. I think bulls will exit below 27, which is why bulls bought the close of 27, trying not to let it trigger and figuring if it doesn't trigger, they can just pull their stops below 27 and have them be there. Good bar on 28 with a tail on the top and more follow through on 29. It's not really ideal follow through on 29. It's a lot of overlap with 28. We're probably not going that much higher before we pull back. I thought that the 6 open essentially, or the 7 high, whatever the top of the sell climax, whatever magnet you'd like to use. I thought that general area we were going to find some selling, but instead we blew right through it on 30, which is really important. And there's a lot of important things. So I thought at this point, actually, let me get to bar 43 first, because I thought a lot of important stuff happened in here. So 30, a really climactic bull bar towards the top of the trading range, so really not as good as it could be. 31, this is just profit taking. I think similar to this, when you get a climactic bar, profit taking, climactic bar, profit taking. 32, an inside bar, bulls probably exit below, and then a bull bar closing near its high, 33. I would not buy above 33. I think you're buying too high, and I think that after this big of a climactic bar and relatively deep in this move towards top of the trading range, we probably need a couple legs sideways, probably 45 minutes to an hour of sideways trading. Generally, if you think 1 leg down isn't enough, you're going to need at least 2 legs or maybe, an hour of sideways trading, which I generally expect to happen, at the bottoms, before a move starts essentially. So in this, when you have a bull trend and then you start to go sideways, you have to expect you're going to go sideways for the better part of an hour before you get the move. So 33, probably not the best buy. Follow through 34, but it's a high one. So you need to be willing to scale in. Oops, sorry. You need to have a wide stop and be willing to scale in if you're going to buy above 33. 34, the tail on it touched the 32 low. And so any bear who sold the close 32, disappointed 33. It was consecutive bear bars. So in theory, reasonable to sell the close of 32, although I wouldn't. Disappointed 33, using 34 to get out. Followed through 34, 35. So in theory, these are by the close bars, but I would rather wait for a strong breakout above the 18 bar range. Keep in mind, 90% chance we break out of the 18 bar range, which was from here to here. We're probably breaking out to the upside. But 3 straight bull bars, I would probably just wait. You have all these tails. It's possibly a wedge on a lower time frame. up, down, up, down, up. So potentially 3 pushes. I would just rather wait to be, it's possibly a wedge, so they're wedges, but they're different, right? So 21 goes up first and then down, and 22 goes up and then down, 23 goes up and then potentially down, right? So it's a wedge. And then if you look at 33, you have a tail. So maybe you started down and then you went up 33 and then down 34 and then up 34 and then down 35 and then up 35. So it's still a wedge that's potentially going to sell off. It's just you're at the top of the sell off here, right? And you might be, towards the middle here. But either way, it's a wedge on a smaller time frame. 36, a big bear bar closing near its low. I'm not selling 36. I'm a lot more open to buying than I am to anything else. Big heights, high 2 on 37. I think 37 is an okay swing buy, looking, for a big measured move up today. 38. A bear bar, but a big tail. You can see anyone who sold 36 close tried to use 38 to get out, weren't quite able. And you can see that's what was happening on 43. Those traders who took the sell, scaled in above the bar, tried to use this to get out. 39, a bear bar, a bull bar with the tail on top, and then a big follow through bar on 40. But what do you notice about 40? You can see the 31 high, the 35 high, and the 40 high are creating some sort of wedge. So 41, potentially a wedge top. I would probably get out below 41. You can maybe stay long, but I don't know. I would probably just be done with this trade and wait to see what happens. Wait for a strong breakout above the 18 bar range. It's only bar 30. It's only bar 40, 41. So we still have a full half of the day left. So you have to be imagining. At this point, I thought this rally might take a lot longer than it did. And so you're sitting here at this point when there's a whole half of the day left, and you got to be thinking, well, what are we going to do for the rest of the day? We're probably going to get at least one more swing trade. So look for that. Get out below here, look for that. And then big outside up 43. So what's important that just happened? There's a couple of different things. One, if the traders who sold above the II during, they sell above 11 during 13, they don't really have a chance to get out. Maybe you could argue during 13, if they sold, they quickly scaled in and then used that, but that's really hard to do. Most of those traders got trapped. Where is another gap? Think about it. The 27 high traders, they sell above the bear bar. They scale in higher. They don't like 30, but they scale in higher. They're still trapped. That's really important. And there's one other gap on this chart. It's extremely subtle. It's a body gap. You can see these bodies were a breakout point on a line chart, and they did not overlap with 27 close. So these closes do not overlap. And it's easier to see on a line chart, but you can see there's a gap between this high and this low. So there was 3 open gaps, which is a big hint, especially I think that, this last open gap, I think especially a big hint, and this open gap, a big hint. The body gap's cool, or it's important, but I thought the fact that we had a clear open gap here was really important. And then we got the surprise bull bar on 43, trapping traders in. Additionally, you could argue this is a wedge pullback, or it's a wedge for the bears, but it really just ended up being a wedge pullback. And when you get a pullback in a bull trend, and the pullback is even sloping upwards, you can see this whole pullback, higher low here, higher low here, higher high from this. So when you keep getting higher lows and higher highs in the pullback, it's probably pretty strong. So outside up, surprise bar up 43, good for the bulls. Okay to be long, okay to buy. 44, 45, still buy the close bars. Maybe not 44, but definitely buy the close 45, definitely buy the close 43. 46, still buy the close. 47, a doji bar, probably going to pull back soon. When you get a doji, it's usually the end of the buy the close. 48, a bear bar. Bulls probably exit below. They tried to buy the close, not to let it trigger. I would say bulls are going to get out below 50, and they can just buy again above 51 or 52. There's probably some sort of leg 1, leg 2 in here, I would imagine. That's too big. I don't know, maybe here, maybe that, maybe that. That was another magnet here along with this one. So, but I think the point is when there's a bull trend going on, when you see bar 43, just pick the biggest measured move you can find on the chart. If you're expecting a bull trend day in general, or you're getting some sort of small pullback bull trend, just pick the biggest measured move, the most unreasonable looking one. And the market oftentimes will go a lot further than you think it can. 51, 52 by the close, 53, 54 doji bars. Okay to be long, probably going to pull back soon, but instead we get surprise 55, 56, and probably just start taking profits on the close 56 or during 56. Traders will exit below 57 if it triggers, but it doesn't. 58, 59. So it's an I pattern, 57, 58, 59, really just contracting. And, I think after 50, 56, that's the biggest bar. 60% chance that this is the end of the trend and 60% chance we get one more leg. And we did get that one more leg from 59 to 62. I would say always it's really hard. You can maybe buy above 59, I suppose, since it's a bull trend, stop below 57 or 58, 59, they all the same low. You can maybe buy there, but I would just throw a stop below and, get out below 63. It's really hard to buy the close of 61, 62, that high after that climactic bar. Get out below 63. And at that point, you're probably just expecting sideways the rest of the day. The bulls have accomplished a lot, and I'd be done. For stop orders, I thought you could probably sell below 7 or 8. You could probably buy above 12. You can definitely buy above 12. You can probably buy above 14, maybe 26, but hard. I think 29, good. 37, good. 43, 45, 46, 51, 52, maybe buy the close 53, 54, and maybe 57. But at that point, you're pretty late in the day. That's stop orders. Pretty good day for stop orders. I think on the daily chart, like I mentioned yesterday, if you watched my video, I mentioned yesterday I thought we were going to rally, either today or tomorrow, just because we were at the bottom of the trading range. This was not a good sell signal bar. So big outside update today. Tomorrow, trading range. In my books, I think tomorrow is going to be a trading range. I think that the midpoint of the week will be important since it's Friday. So the open of the week will definitely be important too. So traders are going to fight over the close of the weekly chart, and the bulls want a bull close. The bears want a bear close. Bears want a bear close closing below its midpoint. So they want a bear close, 52.27-ish. It's not exact. You can do it the exact yourself. I'll probably do it tomorrow morning. But they want to close below the midpoint of this, and the bulls want to close above the open. So the open of the week is in play tomorrow. The midpoint of the week is in play tomorrow. So be open to a big move up or down towards the end of the day. Really important to see what we end up getting tomorrow. But I think the open of the week is the big magnet tomorrow, which is right here. So I would pay a lot of attention to that open of the week tomorrow. And if we're able to close or above or below it, again, expect a trading range day tomorrow. On the daily chart, we're in the middle of a trading range, probably not going too far up, probably not going too far down. And yeah, that's the day.